What is going on, everybody? Hope you guys are having the best year of your entire life. So today I'm gonna break down the trading day that I had, which was $5,657, which is pretty cool, right? In 1 hour of day trading, I made $5,600. But you know what's not cool about this? At one stage, I was up close to like 80 some 8,000 something dollars, right? And I only took like 3 trades. Like I took 2 trades, 2 stocks, but I managed the trade, and within those 2 stocks, there were like probably about 10 different trades within those 2 stocks, which I'm gonna break down for you. The thing that I didn't like about today was, I would personally say, I the trades were beautiful. At one stage, I was up quite a lot, but I cannot be upset about it. The only reason why I say that I wouldn't be upset about the loss, or I didn't take the whole profits, I would say is the big reason behind that is because I followed my system, I followed the rules, I followed every single thing that I tell myself every day, which is one of the most important things. Do not use your brain when literally do not use your brain when you know where you entered, you know where you exited, and you also know where your stop loss is, right? I mean, your entry, stop loss, profit target. Please don't use your brain while in the middle, which I did exactly, and which is pretty cool, right? Also, at the same time, I risked about, probably for the day, my risk was like, I would have walked away if, it's very hard to kind of put a perspective to the risk in that case, because I would have walked away if I was down 2,500 bucks. But that doesn't mean that my trades, I would have, no, I risked that much money. No, I didn't. Like for Tesla trade, my position size was roughly about $20,000. I'm just keeping it real. I took Tesla and Nvidia. My Tesla, probably my position size was 20 grand, but I made like $100 a contract, which is pretty cool. Like 40% of the contract, which is pretty cool, right? So that means if you would have done that trade with $1,000 position size, you would have made 400 bucks. See what I'm saying? But of course, I didn't catch the whole move with the whole position size. I sold a little bit as the price went in my favor, and same I did with Nvidia as well. But let's break down the trades and let's go over why I entered, why I exited, what would what would I do better, and also at the same time, I'll just keep it real, man. You know how much I love just coming on here, turning the recording on, just talking facts, right? So the first things first, let's get rid of this. And the first trade was on Tesla. Literally, my first trade was right at the market open. And I'll break it down for you, and let's just do this. All right, so I can walk you through this one candle at a time, why did I trade it, right? So the first things first, Tesla on an hourly chart, it looked pretty weak. Let me show you the hourly chart. It is, let's pull up here. Tesla hourly chart. Show me the hourly chart. This is the hourly chart, and Tesla right before the market opened, it looked pretty weak, especially because look at this. I was like, okay, because we already broke this kind of a trend line thingy that was forming, like there was like one touch here, second touch here, third touch in the pre-market, and we were holding below that. So I was like already a little bit bearish. I was like, okay, even now, if it breaks this 178 level, it looks pretty bearish, right? Because this level has been holding quite nicely. And I want you to think of it like best way to kind of put it is, I want you to think of it as a freshly frozen lake. If you jump on the lake again and again, if you jump on a freshly frozen lake again and again, eventually you're going to break through, right? And that's exactly what's happening. This is a freshly frozen lake. If you jump on it again and again, price is going to go down. Which is, again, this trend line was a freshly frozen lake as well. It broke below, retested. I was like already super bearish about this particular day, right? Just because of this. Also, back to the game. Also, right before the market opened, I even explained in the previous video that I did, I think last week, I made a video as well where I'm like, okay, if any stock is trading around 200 simple moving average, be it whatever time frame, 2 minute, 5 minute, 10 minute, whatever time frame, it's very, very critical level. Very critical level. And also I want to break down this term called confluence. It will be helpful soon. Okay, confluence is when there's more than one reason to jump into a trade. Okay. And also another point which I want to write down is open price. So what's open price? Open price is the first order of the day, right at the market open, 9:30. So I have this indicator that I have on my charts. It's literally called open price, right here, open price. Okay, go search. Let me check if I can find for you, so you don't have to go through open price. Not this. Oh fuck, I forgot which one was it. Was it this? I don't know. Yeah, I think so. Yeah, it is this. Exactly. Yeah. I have daily open marked, and I only want to see it on. I'll show you my settings of it. Let me delete this. My settings are this. You can pause the video, and that's my settings. This is the color, all sort of stuff. All right. It automatically marks the opening price. Like this was opening price of Tesla yesterday, Monday, right? And this would be opening price Tuesday. Anyway, I was watching that. Also, there was at the same price point where the opening price hit right here. Look at this. Where's the opening price? Opening price is 182.4 right here, right? 182.4. This is the opening price. You see the yellow mark here? Where's the 200 moving average? 182.55. Okay. Another cool thing, it will blow your mind. Another cool thing here is this was yesterday's low, 182.2. So I was like, okay, within this 30 cents, there's so much happening. I was like, oh my God, there's so much happening. And we were breaking out of this. In my mind, you know what I was thinking? I was like, okay, it broke out of a big trend line that we were running. It broke out of a trend line. It retested this trend line. It might make it just a little wick, but if it fails this critical levels that I'm watching, which is yesterday's low, also 200 moving average on a 2-minute chart, because first 30 minutes of the market open, I watched 2-minute chart. Then next 60 minute, I watched 5-minute chart, basically like 10 a.m. New York time to 11. I watched 5-minute chart. And after that, I watch 10-minute chart, right? And I was like, okay, there's 3 reasons. Open price, yesterday's high, 200 moving average, and it's breaking out. This candle right here that you see, this wick right here, at one stage, this was a green candle, right? Prices went here, prices went up. At one stage, this was a green candle. And I was like, oh my God, this is really, really going. But then it got rejected. And it got rejected heavy. It broke below this 200 moving average. It's on my watch now. It broke below the open price. It's on my watch now. I'm watching if we can break below this 182.2 level. Why? Because if it can hold that nicely yesterday, man, there's chances that it might hold today as well. The moment we broke below this particular line, that was it. I was like, okay, you know what? I'm going to short this. And this is exactly where I shorted this, right? Now, that was right at the market open. There's a lot of stuff happening. That's why right at the market open, you got to be very, very quick. Because there's no room for you thinking too much. This was my thoughts in the pre-market, most of them, because I'm like, okay, this looks weak on a bigger time frame. This is a 200 moving average. This is the open price sitting right around here because prices were here. So I was like, oh, we're going to open somewhere here. Also, this was yesterday's low. I had all marked up on my charts and I was like, okay, this going to look cool. And the moment it broke below, I jumped in push. Okay. And that was my entry. Now that is my entry is clear. Now let's move forward with what happened after this, right? Initially, I was like, okay, it can move down to first level that I had in my brain was like this. I was like, okay, if it goes down here, this looks beautiful. But what happened? Boom. In 2 minutes, it's making a big move. Like I entered here 182.2. We're trading at 180.5. I'm just like, oh my goodness, sweet. This looks bloody beautiful, right? And then what happened? Boom. It went down even more. Now this is the pre-market low. Now I'm like, okay, it might bounce off the pre-market lowish level. It bounced a few times in the pre-market. Cool. I entered. I took some profits around here. The moment it hit this, I took some profits. I was like, oh my God, this is freaking amazing. Like my average was, I think my average of the contracts were like 2.74 with a power of 5 or something. That was my average. It was trading at this 375. I had $100 a contract. I was in profit. I was happy. Somewhere around here was my entry. I kept adding a little bit. And I was like, oh my God, this is bloody beautiful. $100 in literally 6 minutes of the market open. $100 per contract. And depending on my position size, I was up very nicely. I was happy, right? Took some profits. Sweet. And then it started bouncing. So I was like, okay, clearly this level is important, right? Clearly this level is important. It started bouncing. But at the same time, while we are bouncing, pay attention to this candle, right? There's a rule for momentum. The momentum rule says, this is very, very, very simple rule. Momentum says if a train is going towards, right? If a train is moving, it takes a little while for the train to stop. It just doesn't stop straight away, right? It takes some time for the momentum to slow down. And this momentum picked up towards the upside because of the big range candle. Look how big this candle is. I was like, okay, sweet, no problem. I still want to short this again because I already made a huge move and I'm already up very nicely. And I'm like, okay, let's see what happens. Then the next candle happened. We saw a little wick on the top. And that just gave me, okay, the momentum might be slowing down here. This might be nice. This is something that I'm looking for. Probably there, right? Because of the candlestick's becoming smaller. The next candlestick, what happened? It became even more smaller. This wick, you can call it hammer candle, whatever you want to call it, right? I was like, oh my God, this looks really, really good. Really good. And I'm like, okay, you know what? If this breaks below this 180.5 level, which was my level as well, even from the pre-market, it was my level. Day before, a few days ago, we were trading around this, it was my level. So I was like, okay, 180.5 looks good. If it breaks below 180.5, I'm going to short this again because the momentum's slowing down. As you can see, the candles are becoming smaller. Like there's a little wick. The wick's getting bigger. The wick's getting bigger. Clearly, the wick is, think about it. At one stage, this candle was full green and it closed like this. Why? Because the sellers took over. Now sellers are taking over, that's making a wick. The sellers are like, the fuck are you, where are you going? Go down. And the price moves down, right? And I was like, okay, this looks cool. If it breaks below 180.5, I will short this. Boom. It broke below. I jumped in again. What happened? I'm in the trade. I'm still in the trade. It went back, retested this. I'm still in the trade. No stress, no problem. And the moment I hit low of the day, previous low of the day, that was, for me personally, I'm a sort of trader. I am going to take some profits. I'm going to pay myself for finding the trade. I'm going to pay myself. Does it make sense? I paid myself a little bit. Sweet. Now, think about it. First trade was here. This was kind of a second because I took some profits. Again, I'm still holding some position. This is how you manage the trade. A lot of people, what they do is they jump in once and they just like think, I'll sell when it reaches my level. By the time it reaches your level, I have already jumped in and jumped out and jumped in and jumped out. And because you're a day trader, right? You gotta take profits. Don't jump out fully, but still take some profits. Leave your runners go. Let your runners go, but still take profits. You see what I'm saying? You got to take profits. That's how you make money. Otherwise, what's gonna happen on a bigger picture is you will sell early and then you'll come back and you won't like it. It just doesn't end well. I'm still in. There's no reason to sell. I'm happy. I'm looking for a little pullback. The reason why I'm looking for a little pullback is it already made a huge move from the top to here. I'm like, okay, we might get another pullback. And also it's about to be 10 o'clock soon as well. The moment the 10 o'clock hits, I jump on a 5-minute chart as I explained before. And I'm still holding. There's no reason to sell. Boom. And now 10 o'clock's about to be hit. Bang. 10 o'clock hits. Where am I going? I'm going on a 5-minute chart. Right. Come on, 5-minute chart. And here we are. Next profit target that I have is this yellow line. These yellow lines are my hourly levels. Okay, 1 hour levels. My next hourly level was sitting around 178.1 or 178.2, roughly around that area. And it hit. I took some profits. I took some profits again and I let my runners go. I was like, okay, sweet, I'll leave my runners run. I was up very nicely on this, like insanely nicely on this, right? And then what happened? It started bouncing off, started playing around. I sold somewhere around there, but it started bouncing off. And that just goes to show you really, really quick. At one stage, I was up very big here, but my runners hit my stop loss, which was like kind of, if it gets above this particular level, I'll sell. If the candle closes above this particular level, I'll sell. And it got above and I sold. But basically what I want you to take away from this is I kept paying myself as the stock goes down. And this is what you need to do. Which is why I always recommend everybody to just please do not ever jump in one contract. How are you going to manage that one contract? You'll jump out here, then you miss out on this move, right? Jump at least 3 or 4 contracts. And if you're like, but I cannot afford 3 or 4 contracts, go out there, make some money. Go drive Uber if you have to, man. Go make some freaking money first. You see what I'm saying? Jump 3 or 4 contracts. And if you're trading something like Nvidia, which you cannot, because the contracts are super expensive, and you cannot afford 3 or 4 contracts, you shouldn't be trading Nvidia. If you cannot afford Tesla's 3 or 4 contracts, you shouldn't be trading Tesla first place. Do 3 or 4 contracts so you can take a little bit off, take a little bit off, take a little bit off, still have one runner running. You see what I'm saying? It's called trade management. Trade management is one of the biggest things that you need to learn as a day trader, right? Because the days when stuff is moving, you want to be in the trade. You want to be able to squeeze that money, right? And the days when stuff is not moving, the trade management will be able to help you with getting your position off the table, hence you making money, right? Now this is the first trade, which was Tesla. The second trade was pretty nice as well. The second trade was Nvidia. I'll show you the Nvidia chart right here. And based on the 1 hour chart of Nvidia was sitting at a very, very critical point, which was 900. It was like kind of above 900. And I was like, okay, if we can break below 900, it's going to make a very nice move, right? Especially as you can see, marked on my chart, 900's right here. Next level that I was watching was roughly here, right? And the next level was 889, 890-ish. You get the point, right? Every $5 move, absolutely, Nvidia loves it. And I was watching this. I'm like, okay, 900 being a big level, right? Always remember, every $50 mark, like 850, 900, 950, 1000, 1050, every $50 mark on every single stock is very, very, very critical. You got to watch that. Okay. So now what was happening on a 5-minute chart, because I took this trade around 10:15ish something. And I'll break this trade down as well. Like I broke down the other trade that we did on Tesla. By the way, if you're enjoying this, please subscribe to the channel, like this video, check out the description of this video. It's just throw some love, because my only goal here is to give you the source, the stuff that I do, and trying to do so like literally full on giving you the source only because I want everybody to make money. All right, so drop some love in the comments, because oh my god, my ego loves that. Nah, jokes, just joking. Jokes apart, still subscribe to the channel, that'd be awesome. All right, now trading these big levels like 900, one of the best ways to trade this is literally let it break, let it retest, let it play around. All right, I personally love, after a big whole number breaks like this, I love if it can give me a flag kind of pattern. If it can give me a kind of a flag pattern after a big level like this breaks, oh my goodness, I love it. I really, really do love it. Because this a very, very simple reason. The reason is 900 broke a lot, and it kind of bounced off this 895, which was a critical level as well. And now there's some selling pressure from the top. Think about it. That's why we have this wick. That's why we have this wick, right? There's some buying pressure from the downside, right? But what's happening here? Think about this for a minute. Who is more stronger? Who's more stronger? Buyers or sellers? Sellers. Because sellers went from 918 all the way down to 892 in this instance. Who controlled this? They dumped the price. So who's more strong? Sellers. Who has the more chances of winning? It's like two players playing boxing, right? And this player A was hitting the player B for first 7 rounds out of 8 rounds, right? I don't know exactly what I'm talking about, but from 8 rounds out of 7 rounds, he was hitting him. Who has more upper hand on the 8th round? Player A. Why? Because he's hurt at this stage. Yeah, he's trying to fight back, but who has the upper hand? A. Yeah, they were playing boxing. Sellers had more control than the buyers, and now, even though buyers are showing up over and over and over again, sellers still have the upper hand here. Does it make sense? So I was like, cool, it's forming this beautiful thing. I'm interested. And also on this 5-minute candle, I was like, okay, if it can break below this 898, that'll be bloody awesome. I'm still watching this. I'm watching this 898 level because I know for a fact if 898 breaks, we are also breaking out of this flag pattern that we are forming. So it was looking even better. And also there will be some selling pressure jumping in from this $900 mark as well. Because it broke and it's retesting, and all the players that love trading breaks and retests, they're watching this with me. They're gonna jump when this trend line breaks. Pretty straightforward, right? And this is what happened. You wanna see? Boom. Who jumped in here? I jumped in. Right? I'm not gonna lie, I didn't jump in the moment it broke this trend line. I jumped in when it broke this 898 level. The moment it broke this 898 level, I'm like, oh my goodness, this is so freaking awesome. This is it. I jumped in, 898 broke, I jumped in, and my first profit target was low of the day. All right, keeping it super real. I like to take some profits. The moment it hits low of the day, I like to take some profits. Also, at the same time, the seller volume was more than this green candle, which was nice. Boom. It hit low of the day on this candle. This is a 5-minute candle, by the way. So it had 5 minutes for me to take profits. I took profits. I was in about 15 contracts, right? I was in 15 contracts and I paid $9.50 for the contract. The only reason I like to say these numbers, so you know how much position size I'm doing as well, right? I had 15 contracts, $9, almost $1,000 a contract, almost $15,000 position size. I took 10 contracts off around this level. I was still holding 5. All right. My game plan here is I will take most of my position off, or I'll take 50 to 70% position off here, and the remainder of the position, I will leave it for the big move. When I say big move, it's either hero or zero. When I say zero, I do not mean I wait for it to go to zero. I mean where I entered at 950. It was trading around 1230 at this point where I took it. But I will jump out the moment these contracts go back to 950. Basically, break even of my runners, right? So the moment this goes back and it hits the break even for my option contract, I was like, I'm going to jump in anywhere. So there's pretty much, think about it. This simple concept is called negative risk management. All right. Negative risk management means you have already taken some profits. All right. And now the runners that you're holding, you're like holding as a break even. So there's no risk whatsoever on those, only reward. Because if it decided to go down and dump and go down to 950, move down, or 850 in this case, because 885 down to 850, it'll make a big move and I'll get paid. But if just in case if it decided to bounce, there's no risk. Why? Because I entered at 950 a contract. I'm gonna sell at 950 a contract anyway. So what I got to lose? Nothing. You see what I'm saying? Does it make sense? I'm literally trying to give you the full sauce because I fucking love you. Alright. And this is what happened. It bounced. And it bounced. And it kept playing around, then it went. My break even got hit and I got out roughly around there. But this is how you trade. This is how I traded. This is how I made the money that I was showing you before. Let me know in the comments down below which is the one thing that you absolutely love about my trading day, or what was the one thing that you learned from this way of trading, or the way I traded, and you watching this 20-minute long, 25-minute long video, what was the one thing that you learned from this? And I'd love to read those. All right, let me know. And also, if you want to watch the full trading course, how I make the money, there will be a link probably right here, I think right here, and subscribe to the channel right here. And if you want to learn more how I trade and stuff, there should be a link probably right above me, and I'll see you soon. All right, let's go.